Joining us now is Bill Eigen, JPMorgan Asset Management CIO of Absolute Return Fixed Income. Eigen's E-I-G-E-N's German. K-E-R-N-E-N is German, but we both get the E-G-A-N and the K-E-R-N-A-N, and we look like we're from
no one ever gets my name right.
From the Emerald Isle, but it's more German. If I were to summarize your comments here, it's like you don't think we're out of the woods, but you think some of the worst might be behind us. And you were defensively postured in your fund.
I was, yeah.
On March 31st.
Yep.
And now you're thinking that finally there are some opportunities on the long side emerging slowly.
Yeah, 100%. I mean, well, fixed income's math at the end of the day.
Yeah.
And what you saw in mid-April, particularly April 9th, 15th, 16th, 21st, really certain segments of the fixed income markets that aren't as widely followed really got hurt. Convertibles, especially convertible bonds, really got nailed. Especially parts of the market that got hit on equities, like semiconductors, for instance. A lot of convertible bonds from the semiconductor area got hit hard, so we took advantage of that. Also, credit, high yield credit, finally got up toward a 10% all-in yield, which is a trigger for me to start deploying some capital there. But it disappeared pretty quick. I mean, by the 21st, everything just pretty much V-bottomed and started moving away. So I still am relatively defensively positioned, but did put a reasonable portion of the fund to work in those areas. But the thing we all have to accept now, like everyone's so focused on the data today, right? Oh, the jobs, what's going to happen with the jobs? We're one Truth Social post away from being up or down 5% every day, right? Mm-hmm. The data is almost secondary at this point. And the jobs data today, that survey was done pre-Liberation Day, so I'm not sure what it's going to show. I mean, I think the expectation is 133,000. Mm-hmm. I guess I would take the under on that, but the May number is probably not going to be pretty. I mean, being a small business owner myself, I can tell you there's a lot of uncertainty right now, and even though the businesses I own are doing pretty well, I'm not actively hiring anybody right now.
Forgot that auto parts and stuff like that, right?
Yep.
You told us about that last time.
Yeah, no, and by the way, input costs, auto parts, auto service, holy cow.
They don't pay you at JPMorgan? I mean,
it's a side hustle.
You're like a side hustle. Yeah. Really? What else are you involved with?
Small business I bought out of COVID, basically.
You're a Renaissance man. So you make the point. I guess when we all saw that spike in yields,
yeah,
where it looked, some people basically started thinking the world was ending at that point. You're talking about the 480 on the 10. You think that could happen again at any time?
Yeah, 100%.
Because we've all been lulled into, we think, oh yeah, that's over. We're at 420. We were at 415 earlier this week.
Yeah, I don't like it.
Over?
I don't like it, but that stock bond correlation being positive is not a good thing, right? It's like you think bonds are a hedge, and then you realize during the heart of the the downturn in mid-April, 10-year Treasury yields were moving straight up, not down. So they were the opposite of a hedge for you in April. And what that tells me is that that's a statement about confidence in the U.S. I mean, did you know this, Joe? I mean, credit default swaps in the United States are just about the same as Greece. So that tells you about what people think of the creditworthiness right now of the U.S., right around 60 basis points. Same with Greece. Greece almost fell off the map, 10, 15 years ago. And
is that the 37 trillion or something else?
It's a combination. I think the deficit situation is untenable, right? You just can't sit here with 2 trillion plus deficits. And when you look forward, I don't see anything that's going to make the deficit better. You got tax cuts coming, which are going to reduce the revenue side. You got increases in defense spending, interest on interest, which keeps moving up. You can't cut entitlements. So how's the deficit going to get any better? And I think foreigners look at that, especially large holders of treasuries like Japan, China, et cetera, and they're like, you know what? Maybe we need to divest. Well, what do you divest into? Aren't we the cleanest dirty shirt in the room? Well, Not necessarily. Maybe it's gold, right? Your gold's going straight up, silver's going straight up, copper's maintaining high levels, which is not good for inflation, by the way. Right. And I'm seeing it in terms of input costs of raw materials, especially things like auto parts, as I talked about earlier.
Good piece, Kimberly Strassel today. Instead of this administration, it's supposed to be Republicans, right? Yeah. Instead of focusing on like Medicaid reform or even food stamp or any of the welfare, some of these things that are out of control.
Yep.
We're going to take on the drug companies. They say it's almost like we elected Kamala.
I know.
And then for revenue, there's a whole contingent in the White House that wants to raise the top rate, wants to raise taxes, a millionaire tax, a Bernie Sanders millionaire tax.
Hey, I live in Massachusetts. I deal with that, right? They just passed a millionaire's tax out there a couple years ago.
Did you vote for Elizabeth Warren?
Oh, don't even get me started.
Do you just not go in Massachusetts? You write in.
I go. I do the best I can. I'm a balanced guy. I just try to, I just want things that are good for everyone, and a lot of policies on both sides aren't good for everyone.
Markey's the other one too, right?
Yeah.
Oh my God.
Yeah, it's a lot to live in Mass.
All right, Mr. Eigen. But I didn't, reading your notes, I didn't feel like you're ready to jump right now. You're okay?
No, I mean, mid-April was fun. Like when volatility hits like that,
really?
I take my
masochist. Yeah.
I love it. Well, because I'm sitting on liquidity, right? And that liquidity is paying me almost 4.5% to be in it, which is a lot more than you get on a 10-year Treasury. So why take a chance on the long end, especially with everything going on, when I can get paid more to not be on the long end and have that liquidity available? It's like the problem we're dealing with right now is that, this administration is dealing with, the correct path is very often the most tortured, right?
In investing too.
Investing too, and they want to get this trade deal done. But it's going to be a torturous path, and I don't think the market's quite done being tortured yet to get to that end point.
None of us are.